Good morning. Welcome to CNBC TV18 HDFC Sky Election Headquarters. I am Reema Tendulkar. With me is Surabhi Upadhyay. And the markets continue to roar. They're shining green. They're blinking green. 1.2% higher. The Nifty is on the cusp of 22,900. Mid-caps are outperforming. It's a 2.7% gain on the mid-cap index. And look at that advanced decline ratio, Surabhi, 10:1. You remember there were a couple of days, I think even on Monday, when the markets rallied so much, we were up close to about 3%, and we said that, hey guys, the advanced decline ratio is still 2:1.
Yeah.
We were a bit disappointed on that front, but today it's the small cap, stocks which have partied, and PSC index, it's shining bright.
Yeah, no, absolutely. It's an amazing market, and it's a completely different market from what was happening on a Tuesday or what was happening, let's say, in the first half of Wednesday. This Thursday morning is almost like this election verdict never happened. Because look at the index, 22,900 is back on the screen. Now, this is a market that's just 2%, again, just 2% away from the all-time highs.
Yeah.
So this intense volatility that we've had in a span of about 24 hours, at least for now, the market seems to be putting that completely behind it. And it's swinging to the other extreme, which is a lot of optimism. The optimism being that there will be policy continuity, that Modi 3.0 won't exactly, go back or roll back on the stated agenda of capex infrastructure. And that's fueling the kind of moves that we're seeing in the PSU space. In fact, it's back to economy-facing PSU capex stocks. A lot of the moves that we saw yesterday in FMCG, they got sold into. There's been correction in the FMCG side of the market right from the morning, also in pharma. So it's, again, defensives out of favor, back into economy-facing. That's been the trade so far this Thursday. And, that will be illustrated with the kind of stocks that are moving. Look at the Nifty stocks right now. So you have an SBI, NTPC, Coal India, ONGC, BPCL. The top, 5-6 stocks are all PSUs. Then you have a good participation from the financials today. Shriram Finance is doing really well. Bajaj Finance. So even the non-banks, they're having a pretty good session. And there's some support from technology as well. So all in all, it's a fantastic looking screen.
Indeed. Just to put on board the week-to-date gain so far, Monday to Thursday, the Nifty is up 1.7%. The mid-cap index is up 2.7%. While the PSU index today has rallied 6%, it's still not back to its Friday levels. Week to date, the Nifty PSC index is still down close to about 2%. And a quick word on, that's a 7-day move. We're talking about week to date. Monday to Thursday, the PSC index is not back to the Friday closing level, falling short of it by close to about 2%. Just a quick word on the events to watch today. One, today is the Nifty 50 expiry, so the last 30 minutes are going to be very crucial. The ECB rate decision and the US initial jobless claims on the global front. Day 2 of the RBI monetary policy. ITC is going to be holding a meeting of the shareholders to approve the demerger of the hotel's business. And Z Entertainment and Camfin Homes should be two stocks on your radar today because their boards will be meeting today to consider some fundraising. But let's begin trading hour and invite the first guest on the show, Neeraj Chadawar, the head of fundamental quantitative research at Axis Securities, joining us on the show now. Neeraj, what have you made? Markets have been whipsawed in both directions in the last 4 days, but we've come out on top now. Where from here? In your strategy note, you had given a bull, bear, and bull case, base case, and a bear case scenario. Are we headed towards the bull case scenario? Talk to us about the near term and even the medium term.
Yeah, thank you for having me on show. So we have come up with our strategy report, and what we have seen that on 4th of June, there was a knee-jerk reaction in the market. The mandate was completely opposite of the market anticipation. So the India VIX went up by almost 26 to 27% in a single day. And immediately after the clarity on the government formation, though it would be a coalition government, we had seen yesterday that India VIX cool up by almost 29%, and today also 7 to 8% correction. That is a breather for the market, which is giving breather in terms of the policy continuity. So we are very so if we have a policy continuity, so the agenda of capex will always be on a table, and we believe that will be the primary driver for the earnings growth for Nifty 50 going forward. In our base case assumption, we value Nifty at 20x on for March 25, and we come up with a target price of 24,600. And we believe that at the current juncture, there is no downside risk for the Nifty 50 earning, and we have enough lever for Nifty 50 to grow from the current level. In bull case scenario, we have anticipated multiple things for our bull case, in which we pointed out there could be a policy and political stability. On top of that, there could be a possibility of rural recovery in the second half, and there would be a flavor of US economy which will be supporting in the second half of the FY25, and there could be a possibility of soft landing in US market, which will lead to 17 to 18% EPS growth in Nifty 50 for FY25, which would lead to the eyes of FIIs in Indian market, and this will translate into higher multiple for Nifty 50, and we are giving 22 multiple, and that could be the case possible in a bull case scenario. We could touch 27,000 by March 25, and we are also having a bear case scenario when we have a political instability, and there could be a hard landing in US market, which could be posing challenge to the Nifty 50. In that case, we could see Nifty could be around 19,700 from 1 year forward. So given the current scenario, we believe that all eyes will be on the upcoming budget. The market will gain further strength from the upcoming budget, where we see the policy stability, and the stance will be towards the capex driven growth.
Ah, okay, interesting. Neeraj, so you're saying that in the upcoming budget and maybe as we get more policy clarity, stance will still be capex. So then, what to do with these stocks, because they ran up so much and then everybody sold them off on, Tuesday and a bit yesterday. But today they're recovering, and it really leaves investors very confused. What to do with capex stocks now, PSUs and capex?
So at this juncture, the scenario has emerged for the defensive because the volatility has spiked in last couple of days. Historically, what we have seen that whenever the volatility is spiked, the market positioning tend to shift towards the defensive trend of stock, and that's why the FMCG, IT, and some of the pharma names have emerged in last couple of days. We continue to believe that market positioning going forward will continue to slip slightly towards consumption, because multiple trigger has emerged for the consumption to pick up in the second half of FY25. First trigger would be the normal monsoon expectation, which likely to be average and above average, which will be good for the rural recovery. And then now with this coalition government, there could be some amount of allocation likely to be for the rural spending, which we still need to see what quantum of allocation which likely to be present in the upcoming budget, and how the policy could shift. But at this moment, there is some amount of anticipation that some money could go to the rural hand, or in terms of schemes, or in terms of some allocation. So that's why all these things have emerged, and we continue to believe that consumption theme will be the dark horse theme for FY25, based on all these positive trigger emerge in last couple of days.
Okay, so consumption could emerge as a big, theme, which could be the winning theme in the next few, months and years ahead. What about affordable housing? There is a lot of chatter that, perhaps now the next thrust of the government could be on affordable housing. Would you play that theme? Does it make sense to front run, buy some stocks? And if yes, which ones in your top pick would play to the affordable housing theme best?
So at this moment, based on the policy continuity, the government thrust will likely to be on the affordable housing, and more on top of that, there could be a Pradhan Mantri Awas Yojana likely to be continued in upcoming year also. So at present, given the market structure, we believe that the market positioning is likely to be towards more defensive stock in the BFSI space. We continue to like ICICI Bank in large cap private bank, and we believe that SBI and Bank of Baroda will provide a more promising upcoming more promising in terms of the overall asset quality improvement and overall ROE improvement. We believe that they do have a multiple lever available to bridge the gap between the private bank multiple and the PSU bank multiple. So we continue to believe that more market positioning is likely to shift in near term towards the large cap private banks. And on top of that, we believe that there is opportunity in the vehicle financer is emerging. So that's why we have added Chola in our topics. We believe that NBFC will be the biggest gainer, likely be in the second half of FY25, based on the overall macro structure which is emerging.
Okay, so you like a couple of financials, ICICI Bank, Chola, and those other financial names that I believe also SBI, some of the financials that you like. But I just want to go back to the point on consumer. And I'm looking at the kind of stocks that you've picked out. There's Nestle, there's Varun Beverages, there's even a Westlife Food, which is actually underperformed. Numbers have been very underwhelming from Westlife in the last couple of quarters. So just run us through your thought process on consumer stocks and how have you picked these? Is it a valuation call or what is it that you're seeing in these topics?
So in our topics, we continue to hold all these consumption names from quite some time. We continue to like Varun Beverages from quite some time. We believe that Q1 is likely to be a very good quarter for Varun Beverages because across the Q1 we have seen the heat waves. The temperature has reached to 50 plus in the North India. Along with that, there was an election campaign which is going on. All these is likely to translate into good volume growth for Varun Beverages for Q1. So we continue to like Varun Beverages. Along with that, the Nestle is a good player which we had recently added. We believe that from last couple of months, there is a good run-up we have seen in mid and small cap. So slowly in our topics, we have shifted towards the large cap name. Right now, in our top 16 name, we have 8 to 9 large cap names because that is the right now flavor of the market. So that's why we continue to like Nestle as a consumption theme because Nestle is the biggest player in the consumption basket, and we believe that they are also increasing their presence in the rural market, and there is a rural recovery anticipated in the second half. That could be also be the beneficiary for the Nestle. About the Westlife food, we believe that QSR theme was quite on a backseat from last couple of quarter, but we believe that the enough base has become for the QSR theme to perform from the current level. We believe that FY25 likely to be the good year for QSR theme with a lower base. We believe that there will be a good amount of consumption to pick up in the urban area, and on top of that, they are on the strip of store opening guidance. We believe that all these will likely to translate into SSG growth for the QSR industry, and we believe Westlife Food is rightly placed to add in the recommendation at current juncture.
Thank you, Neeraj, for joining in. Look forward to more conversations with you on CNBC TV18. Need to get into a break for now. On the other side, we'll talk commodities with Manisha Gupta. Stay tuned.
Welcome back. Well, let's talk about a lot of the cues that we're getting from the commodity markets. We have Manisha joining in for exactly that. Manisha is looking at coal. That's interesting, Manisha. We don't talk about that too often. What's causing the interest there?
Well, the thing being that we started this year on a positive note. The first quarter also went on positive, but since then there has been a sharp decline that we've seen in prices. So from where we trade right now, the global coal future prices are now trading below $140 a ton right now. It's a 5-week lows that you have seen come in for the prices. The prices have declined 4% on a week, and when you look at the last 1 month, we're down by nearly 6.5% for the prices here. Well, the major producers clearly are China and then India, slightly far behind there, but there is a very strong decline in demand coming in from China. There is stagnation in property, and even as China has made various stimulus measures and eased mortgage rates as well for the first home and the second home buyers, even after that we haven't seen a very strong demand come into the markets. Infrastructure sector also is looking at a weaker demand from here on, and then there is an increase in supply, as I said, from China and India as well, and those numbers continue to increase on a quarter-on-quarter, year-on-year basis as well, and that is putting pressure on the markets right now. The street does believe that the coal prices could be trading almost to the lower side of $120 a ton as well in this current quarter itself.
Thank you very much for that. Let's move on to a corporate conversation. CG Power will foray into the consumer business by selling appliances. That's the word coming in from Murugappa Group's Velayan Subaya. Speaking to Shireen Bhan from the sidelines of the EY World Entrepreneur Awards in Monte Carlo, where he's representing India, Subaya said that he was betting big on electric mobility and the semiconductor business. However, he's ruled out any acquisitions in the near term and is betting on organic growth and partnerships. Listen in.
Let's start by talking about Chola and the growth trajectory that you've charted for the company. The second largest NBFC today, an ambitious target as far as the assets under management is concerned over the next 10 decades. Largely organic, or do you believe that there could be inorganic opportunities that you would consider?
In Chola, Shireen, I really believe our path is going to be fully organic. Financial services penetration in India is still incredibly low. And for NBFCs like us, like you probably know, we've compounded at about 25% over the last 14 years, per year over the last 14 years. And I genuinely believe that that kind of rate of compounding is possible over the next decade as well, just because of the kinds of opportunities that the country has to offer and the fact that we still see fairly limited amounts of financial services penetration across the country.
Well, given what you say is the low penetration, which implies that there is significant headroom for growth, outline for me what will be the levers that you will continue to exercise in order to improve the performance as far as Chola is concerned. Just in the context of your last set of numbers for Q4 FY24, very robust quarter, your credit cost at an 8-quarter low, your net interest margin at a 4-quarter high, your GNPA ratio at a 13-quarter low. In the near term, the medium term and the long term, lay out the growth map for Chola for us.
Yeah. Shireen, so that's a great question. So when we look at it, obviously you've got four major areas, right? Kind of what yield are you getting on your assets? What are your operating costs? What are your costs of funds? And what are your NPAs, right? Like you said, NPAs are now tending towards a low, but costs of funds have tended towards, being on the more expensive side right now. I do believe that India is at a higher point in its cycle in terms of the interest rates and therefore our cost of funds as well. But what we're seeing is that is being offset by basically being able to generate slightly higher yields. So we've been able to maintain a pre-tax ROA in that range of about 3.5%. I'd say largely over the decade. We tend to oscillate around that. When costs of funds are low, then we tend to be able to push more towards 4. And when costs of funds tend to be higher, or when GNPAs tend to be higher, or when NCL tends to be higher, then we tend to kind of go towards the lower end of that. So I really believe that this is what's going to happen. So when I see our levers, basically it's just focused on the same levers again. As we scale, obviously we get more operating expense leverage. And so I do believe that number is going to start coming down, which is going to help us a fair bit in terms of expanding, our overall pre-tax ROA. And the cost of funds is obviously going to be cyclical. So when that comes back down, kind of that will shift as well. Obviously, the two other areas where we do a lot of work, a lot on yield, which tends to be kind of looking at our business mix. We've constantly added new businesses and shifted our mix between existing businesses so that we can maintain a healthy yield across our overall portfolio. So when I see vehicle and some of what's happening on the vehicle side get more competitive, we've now got new segments. On our affordable housing side, we're growing significantly. Our loan against property business continues to be very robust. So basically, the business mix is really helping us. We've also got a small amount of unsecured in our book as well, which is performing well for us. So I'd say the business mix is a huge lever. Then obviously there's a lot we're doing around data and what we can do, both in terms of origination, but also in terms of underwriting, and that's helping us with our losses in that portfolio as well. So that's basically helping us a fair bit. So I would say kind of just activities on origination, activities on our underwriting, and then looking at overall mix. Obviously, the growth engine remains robust, and that's where we continue to add branches. Most of the other business units are expanding into the vehicle finance branches today. So our cost of adding branches is also fairly low. So we're close to 2,000 branches now and continue to scale that number as well. So that's the overall mix from a Chola perspective, and I think it's really quite robust as I look at it. I mean, obviously, I do think that there will continue to be cyclicality, but over the medium and long term, I still feel very bullish and very strong about that business.
When you talk about your aspiration of being a significant player in the clean mobility, in the electric mobility space, in the next 3 to 5 years, what could that mean if you can quantify that for us? And you have done acquisitions in this space. Are you likely to do more? What does the launch pipeline look like? You've already, you're in the three-wheeler space, you're in the commercial vehicle space as well. Outline for me what the next 3 to 5 years will look like when you talk about significant presence in the electric mobility space.
Yes, so definitely, right now I don't see any more need for acquisitions in that space. So now we've got enough of a base knowledge and we will develop on it. We might have partnerships, but no more acquisitions is what I believe. So like you said, we've launched a three-wheeler. We will launch a 55-ton electric truck. What we will also be doing over the next 6 to 9 months is launching a small commercial vehicle, starting with a 3.5-ton GVW and then looking at different payloads. And then we will also hopefully over the next 12 to 18 months launch our tractor. And I think that both of those products have huge potential in India as well. The small commercial vehicle space sells roughly 30 to 40,000 units a month. And as you know, tractors basically sell close to 900,000 a year. So both are large potential. And I do believe that both those products have a larger propensity to move to electric. And so that's going to be our big bet as far as that one is concerned.
I know that you're very optimistic about that sector, and which is why you've decided to foray into it. Give us a status check to where things currently stand as far as the partnership is concerned and getting things off the ground.
Yeah, so honestly, the government has been very, very fast with all of its approvals. We've just started the design and building of the factory in Gujarat. But these are quite complex factories to build, so our estimates are it'll be 2026 before we can basically start operations at that factory. But we're kind of going full steam ahead. We've got I would say over 50% of the senior level memberships of the team basically recruited, and we're basically working on the design and build at this stage.
Velan, you spoke about CG and what you've had to experience over the last 18 months at CG and the learning curve that you've been on there. It has been a turnaround story that everyone has taken note of, including the markets. I want to understand from you, what has really been, to your mind, the big attributes that have helped you script that turnaround? And more importantly, as you look ahead, where do you see things for CG over the next few years?
I think the opportunity for CG right now is fairly immense. The company generates very strong PBTs and free cash. We've been generating close to 800 crores in free cash. That's almost 100 million in free cash a year. So all four businesses are looking at significantly expanding capacity. Also along with a new business that we're adding, and that makes is the consumer business because a non-compete got over in 2021. So that continues to have a lot of opportunity. And then one area within motors that we're also looking at fairly seriously is the drives business. Also what we're looking at from CG is both the export market and the service as a mechanism of income. But beyond that, also, I still think we will generate more cash in the company, and we're looking at, again, the best ways to allocate that capital as well.
Velan, on the consumer business that you just spoke of, outline for us what we could potentially be looking at in terms of you building that out, and what would the capex be across each of these businesses that you just spoke to us about for CG?
Yeah, so I think the capex that's already allocated, we've already outlined in our earnings transcripts and our earnings calls. But for the consumer business, we basically start with fans and pumps and kind of the more general electrical appliance areas, and then look at new areas for growth beyond that. So for the first couple of years, we'll just be establishing a beachhead in those areas, and then we'll start looking at what we can do from a growth perspective.
All right, so that is the latest on CG Power. We will take a quick break on that note, come back on the other side, and we'll put the spotlight on a few buzzing stocks. IEX, BHEL, NBCC, HAL, a lot of these PSUs are buzzing today. We'll get you the reasons.
Welcome back. Let's focus on some stocks which are in the news, and top of the list is IEX, surging on the back of a strong business update for the month of May. Vivek is here with the details. Vivek.
Well, that's right. The company yesterday evening went ahead and reported the May monthly operational performance. When you're talking about the monthly total volumes, it came in over 10,633 million units, which was a gain of almost 29% on a year-on-year basis. So very strong volume activity. The core electricity volumes went up by almost 21% on a year-on-year basis. The day-ahead market price came in at 5.3 rupees a unit, which the company says is almost a 20% discount to the kind of pricing that is seen in bilateral contracts between both the power producer as well as the DISCOM. So they believe that it is much better for power producers as well as buyers to come onto the exchange. Now they're saying going ahead, they see increased sell-side liquidity from sale of surplus unrequisitioned power on power exchanges. They also expect to see increased fuel supply and also higher availability of generating units is something that is expected to aid the sell-side liquidity going forward.
Okay, that's on IEX. Vivek, also tell us, there's BHEL, there's NBCC, a lot of buzz over here as well. More order wins?
Well, you're right. When you're talking about these PSUs, order wins is what keeping them very, very active. BHEL, we've been saying it time and again that the order book, especially over the last 2 years, has been increasing quite significantly. Yesterday, again, 2 very significant orders coming in for BHEL. So the first order is from Uttar Pradesh. In the state of Uttar Pradesh, the company will be supplying equipment. Now, this particular equipment is for a 2 into 800 megawatt. That is almost 1600 megawatt of a power plant that is being set up. The company will be supplying boilers, turbines, as well as generators. And the total size of this particular order is over 3,500 crore. Now, the second order is in the state of Chhattisgarh. Again, the scope of work is similar. The company will be supplying equipment as well as the EPC works. Order size, again, over 3,500 crore. When you're talking about the total order size that the company has received, from these 2 orders, over 7,000 crore. And the order book of the company right now stands well over 1.3 lakh crore. However, what needs to be tracked is the kind of execution that BHEL would be able to manage and the kind of margins that they expect to order. NBCC, like you mentioned, over 490 crores worth of order wins that came in yesterday. Stock surging on the back of that.
Got it. All right, Vivek, thank you very much for getting us the latest. So PSU is really the flavor, and the additional order inflow information is only adding to the sizzle. Let's move on. City Gas Distribution stocks also up and about on the back of brokerages writing some notes. Citi has published, a note that sounds quite favorable for the sector. The regulatory authority, PNGRB, has also issued a draft notification for gas distributors to establish and operate LNG terminals. We have Sonal here with the more details. Sonal, lots of news here.
Well, there are a couple of things which are happening with these gas names. Let me start with the Citi note first up, where they remain constructive on GAIL, IGL and MGL as well, and these are the preferred picks. They believe consolidation in CGD sector is likely going forward, and consolidation could benefit the larger, more experienced CGDs according to them. The second thing that they talk about is something that the other analysts have spoken about as well, is a possibility of gas coming under GST in the new NDA regime, and if that happens, that would benefit the entire value chain, allowing input tax credits and reducing costs for these companies as well. The second is 2 PNGRB notifications. The first one is allowing these companies to establish and operate LNG terminals. The LNG infrastructure would include receiving, storing, transporting LNG via their own terminals, because a lot of these companies have spoken about expanding from their current portfolio. The LNG terminal companies, they shall submit application for registration, and they should also furnish bank guarantees to the tune of around 1% of the estimated project cost, or 25 crore rupees, whichever is less. Board, after examining the application, may issue certificate to commence operations for around 30 years. Again, this is just a draft. The third piece of news is that PNGRB has issued another notification where they actually revoked the previous notification dated 13 September 2021, which would allow more marketing freedom to all these city gas distribution companies. They say that now the exclusivity factors would consider a lot of things, not just the number of years. It would consider the location, gas availability, population and aggregate demand as well. ICICI Securities says that this is positive for their coverage companies like MGL and Gujarat Gas and IGL as well, because there was a fear of more competition coming in, with marketing exclusivity ending for a lot of these other companies. They see this notification to give some relief to existing CGD players that enjoy marketing exclusivity and something which is not ending in the near period.
Okay, all right, Sonal, got it. Thank you very much. Important regulatory developments to watch out over there. Sonal, before we let you go, actually, just a word on Century Textiles as well. That stock's been shooting higher and higher on the back of this real estate development the company will do in NCR.
Well, Century Textiles wholly owned subsidiary, that is Birla Estates, has entered into a joint venture which is with Barmalt India Private Limited. They will be developing around 13.27 acre of land parcel for a luxury residential group housing in Gurugram under this particular joint venture. The development potential is approximately 2.4 million square feet, and it will offer them a revenue potential of up to 5,000 crore rupees. And remember, NCR is a region where a lot of new developers are entering. They're not new here, but of course they're expanding their footprint in the NCR region as well. Remember, the stock is up 67% in last 6 months itself, and adding on to some gains. So Street likes the expansion plans that they have in the NCR region.
Thank you very much for that. And 5,000 crore, that's a big project and a lot of revenue potential. Thank you for that. We'll slip into a break. On the other side, we'll discuss market technicals. Apurva Sheth of Samco Securities will join in with his top trading bet. Stay tuned. Welcome back. Not at the day's high, but still very high. 1% gain on the Nifty. But in the last 10 minutes, some profits are being taken off. The Nifty had headed towards 22,900, so lost a bit of steam from that level. Apurva Sheth from Samco Securities is with us on the show now. Apurva, what have you made of the price action seen over the last few days? The market's headed higher. Should you chase the momentum right now? And what would your stock recommendations be?
Hi, good morning, and thanks for having me on the show. So the markets have witnessed a sharp rally on Monday and then a sharp fall on Tuesday, and now we are bouncing back. So this bounce back is the best one that the bulls could have expected. However, I believe that right now is not the time to chase these the rally, and I believe that the markets have now corrected or bounced back 78.6% of the entire fall that we had seen from Monday to Tuesday. So this is a strong resistance level, and I believe that markets can go range bound to sideways. So this is not the time to go long in the markets. I would probably, if someone is willing to take the risk, then he can short the index with a stop loss of 23,000 for a target of 22,550. So that would be my call on the index. And for stocks, what we are seeing right now is a lot of stocks are bouncing back, but still many of these stocks are still trading below their Monday highs. So what we are looking at is to prefer stocks that are trading above the Monday highs. So and most of these stocks are from the FMCG basket. So our pick is VMart with a stop loss of 23.25 and a target of 2,700. It's forming a nice basing pattern, inverse head and shoulder pattern. So VMart is the stock that I'm talking about. Another stock is Dabur. So Dabur is also trading above its Monday highs, and the stop loss for Dabur would be 570 with a target of 630.
Okay, all right, got that, Apurva. Thank you very much for the trades for today. Thanks for joining in. Let's get back to the screen and some more buzzing stocks that are in focus today. And actually, we've got more PSU names on the list. HAL has been moving higher. Now, of course, the company is benefiting from the fact that overall sentiment is very positive for PSU stocks today. But the company also inaugurated a facility to support ISRO programs. CLSA has issued a note on the stock as well, and they're still sounding fairly optimistic on it. We have Upasna with the details here. Upasna, fill us in.
ISRO chairman inaugurates HAL facilities to support LVM-3 programs. Mind you, currently the existing capacity allows only 2 LVM-3 launches per year. This facility will support the production of 6 LVM-3 rockets per year. And mind you, post-election results, CLSA had written a note on defense sector wherein it has retained outperform rating on HAL with a target price of 4,731. It says that the expensive valuations leave little space for execution error. Company has also given a EBITDA margin guidance of 32 to 33% in next 2 years. And for FY25, the company is guiding for a order book of 47,000 crores, excluding the MRO division. As of 31st March 2024, the company's order book stands in excess of 94,000 crores, and company says that it is confident of maintaining FY24 growth momentum on the back of robust order book and strong order pipeline.
Okay, all right, got that, Upasana. Thank you very much for the details over there. Let's take a look at one more stock which is in focus, and this is Uno Minda. Now, Uno Minda has been zooming about 17% higher. Make that 18.5% higher. Has been a phenomenal story on Uno Minda. Now, this company has partnered with a foreign entity, Suzohu Innovins, to Innovins Automotive, that's the whole name of that company, that entity. And this is to strengthen electric four-wheeler portfolio of the company itself. Now, we caught up with Sunil Bohra, Group CFO of Uno Minda, to understand how this alliance is going to work and what are the kind of revenue implications that it could have for the company. Take a look.
20% will definitely be a number maybe 2030 or 32, because what we see as of now, there are projections of 17% by 30, 20% by 30. Everybody has different assumptions, and that's why I said normally we don't comment on the penetration or the volumes. But yes, as we move forward, I'm sure market will see at some time 20% penetration as well. In terms of margins, I would say a little early to comment on, because as of now volumes are very less. But as we move forward, as we build scale, as we achieve those kind of revenues, we do expect the margins to be broadly in line with our average margins. But yes, they are as of now a little lower.
That's the big mover, right? Uno Minda. Even UBS has written a note on this stock. Let's slip into a break on that note. As we do that, we'll get you excerpts from our conversation with Pankaj Tibrewal, founder and CIO of Ikigai Asset Managers. We spoke about where he thinks the market is headed, his view on the manufacturing capex themes, and how would he approach the market in terms of, his top bets.
On the election day, about 65 to 70 seats were lost by BJP, mostly on the rural belt. So our sense is that going forward into the next 12 to 18 months, a lot of resources could be diverted to spur consumption, because that's the weak data point which is there in front of all of us. And the message is loud and clear. So I think there could be some shift. I'm not saying that the capital expenditure would be stalled completely, but the 24% CAGR growth which we saw for the last 6-7 years probably can come down. And that probably may not bode well for a lot of names which are very highly priced. They will stick to capex, investment-led growth, but we have to see what stocks are pricing in. The stocks were pricing in a lot of growth, and I think we will be a little surprised that managements would find it difficult to keep up to the expectations of the market narratives in the near term. Also, I think the valuation and margin of safety is limited in a lot of those industrial capital stocks. Don't forget, 4-5 years back, when I was in Kotak, we were the first fund house to call for China Plus One, manufacturing as a great theme. But I think at a price, I think most of these stocks look to be quite expensive. A lot of PSU names on defense railways, the margin of safety is less. A lot of capital good names, the margin of safety is less. And hence we believe that one needs to be prudent in terms of risk in the portfolio. I think risk has been underappreciated for the last 18 to 24 months. But if there will be uncertainty as you move ahead, because finally you have to accept it's a coalition government, there will be pulls and pressures across. And let's see how market takes it as you move ahead. I think the immediate focus will be on the government formation.
Welcome back. Well, it's going to be all eyes on the RBI come tomorrow. The RBI's Monetary Policy Committee meeting is currently underway, with the policy decision due, of course, tomorrow. Now, CNBC TV18 poll is expecting status quo on policy rates, with the RBI maintaining its stance at withdrawal of accommodation as well. Ritu is here with a more detailed account of what to expect. Ritu.
Well, this may be a bit of a wait-and-watch policy because it's squeezed in between the recently concluded Lok Sabha elections and the full budget that is only going to be presented in July. But more importantly, you have a strong growth print, inflation is still ruling above target, and the US Fed is not really itching to cut rates. So there's no real reason for RBI to move on rates just yet. And so this time around, what the markets are going to do is focus on other things, like what the central bank says about, one, liquidity, because, systemic liquidity continues to remain in deficit, even though you have that government surplus cash balance as the elephant in the room. And the second one on inflation, because the last mile of disinflation is taking a tad longer than what was initially expected. But that said, no one is expecting, of course, any change in the repo rate. So a status quo policy for the 8th consecutive time, and no change in the stance, which is also likely to be left at withdrawal of inflation, withdrawal of accommodation. Now, none of the economists that we polled expect any change in stance before August, in fact, and the majority are are expecting the first rate cut to only happen in October, or some even later. On the macro front, the inflation is expected to be left unchanged, the forecast that is, for the year at 4.5%. Now keep in mind, inflation has been moderating at about 4.8% in April, and core inflation providing some comfort to the MPC, but the high food prices, they continue to remain a spot of bother. On the growth numbers, however, they're likely to be revised up from 7%. A majority of the respondents said it could be anywhere between 7 to 7.5%, but many are even expecting it to be left unchanged. The tone of the policy is expected to be absolutely even because there's no real change from the last time around. And finally, to end with what we started with on liquidity. Now, markets want to watch out for any measures RBI may introduce later to regulate the changes in liquidity from any passive inflows that come in from index inclusions. And of course, they expect RBI to continue managing liquidity through the main and fine-tuning operations as needed.
Okay, thank you very much for that. Let's also get you some opinion. Opinion coming in from CNBC TV18 Citizen Monetary Policy Committee. Let's find out from them what they're expecting this time around.
The first question, given the uncertain backdrop, what will the Reserve Bank's rate action, MPC's rate action be? Can I start with, Sajid?
On a hold.
Okay, hold. Soumya?
Pause.
Pause. Sonal?
Hold.
Hold. Samiran?
Yeah, it's a hold.
Hold. Okay. Dr. Sen, the entire committee is saying no action.
Hold.
Hold, yes, thanks. Let me get to the other one. The stance, any change, Sajid?
No change. Withdrawal of accommodation.
Withdrawal of accommodation. Soumya?
No change.
Sonal?
No change.
Shamiran?
No change.
Okay, this is not all that perfunctory. Dr. Sen, in the past you have said neutral. What's the stance now?
I continue to think no change simply doesn't make sense now.
Right.
There is no accommodation to withdraw.
Well, you definitely have one voice in the MPC supporting you. Dr. Verma also believes neutral. He has already dissented. Well, just very quickly, when do you all expect the first rate cut? Sajid?
Too many known unknowns, but somewhere in the third or fourth quarter of this year.
Okay, so that will be October onwards. Soumya?
You are in the third quarter of the current fiscal, so from October.
October. Sonal?
October.
Samiran?
October looks more likely now.
Okay, Dr. Sen, would you agree?
Well, yes and no. I would prefer to wait for the full budget to be presented before one takes a call on.
All right, so a bit of a wait and watch expected tomorrow from the Reserve Bank of India. Let's take a quick break on that note, come back on the other side, and we'll get you all the latest developments in New Delhi. Lots of activity in the run-up to government formation. We'll tell you what's going on today. Welcome back. You're with us on Trading Hour. As promised, let's now get you the latest in terms of all the action that's taking place in New Delhi after the election verdict. Lots of developments in the run-up to government formation. We, in fact, have Parikshit joining in to give us the latest on all the developments taking place. Parikshit, all eyes very much on New Delhi. What's happening today?
Well, absolutely. A lot of key meetings taking place in the national capital. Nitish Kumar is still here. Several JDU leaders, MPs who have been elected have been holding meetings at his residence. Tomorrow is the key NDA meeting where all the NDA MPs who have been elected will come together in Parliament for a meeting. All eyes now on the swearing-in ceremony likely to take place on the 8th, that is Saturday. We've got leaders from India's neighborhood who have been invited, heads of state, heads of government. Now, in terms of the actual nitty-gritties of cabinet portfolios, this time it is a coalition government. We believe that the TDP has asked for at least 3 to 4 key portfolios. The Speaker's post has also been asked for by the JDU and by the TDP. The JDU has asked for some important portfolios such as infrastructure ministries, economic ministries as well. Same for the JDU. They've asked for 4 to 5 cabinet berths. So it remains to be seen how the Prime Minister, Amit Shah, Rajnath Singh, JP Nadda, who've really been holding all those back-channel negotiations with allies, will actually accommodate everyone. Even allies like the LJP, they've asked for 1 cabinet post, an MOS post as well. So let's wait and see how different allies, because the allies this time are very important for the NDA. The BJP has not been able to form a government on its own. So all of these allies and their MPs will have to be accommodated in some way or the other. The swearing-in ceremony will take place in the Rashtrapati Bhavan. As far as speculation about the India Alliance forming government, the message coming in from the India Alliance, it seems, is that they will play the role of a constructive opposition. They do not have the numbers on their own to form the government, and even if they do try and reach out to certain independents and other parties, they'll not be able to form the government. So even NDA leaders, BJP MPs who've called on Nitish Kumar and the TDP, Chandrababu Naidu, they've all said that both these leaders are completely with us. They have asked for special status for Andhra Pradesh and Bihar. So let's see what happens. Of course, there will be a lot of young faces in the cabinet this time, a lot of new faces, because big ministers such as Mahendranath Pandey, who was the heavy industries minister, he's lost his election. Rajiv Chandrasekhar, who was a big face for all the IT industry talks from the government side, he's also lost his election as MOS Meti. So let's see what happens. A lot of new faces set to be inducted into the cabinet.
It's all happening in Delhi's power corridors. Thank you very much, Parikshit, for joining in. The street's focus is squarely on the cabinet formation and if you're going to see any major policy announcements in the first 100 days, what the agenda is going to be. But lots of brokerage notes have also been coming out post the election outcome. CLSA is positive on capex plays, while Jefferies says affordable housing may get a boost in the upcoming budget. Sudarshan joins in to tell us what brokerages are betting on. Sudarshan.
So brokerage notes have started flowing in related to the sectors that new government can focus on and areas that can be amongst priorities in upcoming budget. So first one is CLSA on capex. It says channel checks suggest government's 100-day plan will hit the ground running and large orders may be identified to be placed across infra and defense domains, and this large order placement would reassure investors, and likely demand for more capex in Andhra Pradesh and Bihar should revive state capex as well. CLSA believes L&T, IRB, HAL, NCC and J. Kumar Infra will be key beneficiaries of increase in capex at state as well as central level. Next, we're in Jefferies on housing finance companies. It expects government to announce revamped affordable housing scheme in budget, and this revamped scheme could improve housing loan demand, especially in affordable and mid-ticket segment. Earlier, affordable housing scheme constituted 48% and 23% of home firsts and Awas disbursements over FY18 to FY22, and large housing finance companies like LIC Housing and Canfin can also see some tailwinds from the scheme if the loan cap is increased in the new revamped scheme. And preferred picks for Jefferies are Home First and Awas in affordable segment and LIC Housing and Canfin in mid-ticket size segment.
All right, got that. Thanks very much for that. Indeed, those stocks are doing very well. Sudarshan, thanks for pointing that out. So as we are wrapping up, let's just go back to the screen. There has been a little bit of a cool-off, you'd say, from the top, because the index, remember, when we started the show, had hit 22,900. So from there, there's been some profit-taking. And the stocks which have seen that cool-off, M&M would be one, which is really paramount right up there. There's some softness on Coal India, but Coal India is still holding on to a gain of about 3%. So that stays intact. Some of the banking names, Axis Bank, IndusInd Bank, even ICICI Bank for that matter, so some of the private sector banking names, they are a little wobbly at this point in time. And even on the PSUs like BPCL, Power Grid, NTPC, if you see all of these charts, I mean, from the highs of the morning, there's a bit of a tapering that we're seeing. But I guess, Rima, we have to watch for the banks. If this starts developing into a bigger fall, then obviously it will have implications. But right now, some of the private sector banks in the red.
Even some of the PSUs outside of the index, IRCON, BEL, while they're still up close to about 5-7%, in fact, IRCON is up nearly about 8%, From the highs, we've seen a bit of a cool-off tapering off. So these stocks have slipped about 3-4% from the top. The advanced decline ratio, which was also 10:1, 10 stocks gaining for every 1 stock advancing, has now narrowed. So you still have about 8 stocks advancing for 1 declining. I think the gap is so wide that you can't see the tapering. But from 10:1, by way of a ratio between advances and declines, that's narrowed down to about 8:1. Hindalco continues to remain under pressure in the large cap space, with the Novelis IPO getting pushed forward. And yesterday there were gains in a Hero MotoCorp, for instance, on expectation that the rural, there will be that rural recovery, money will be given to households, so spending will pick up in two-wheelers. But Hero MotoCorp is one of the big losers. HUL is seeing profit booking. Nestle, Divis Laboratories, Sun Pharma, Britannia, defensives are on the back foot. With that, it's a wrap on trading hour from the entire team. Thank you for watching.